Assalamualaikum and salam sejahtera. We meet again in the video for our lecture on topic of financial statement, but this financial statements lecture is without the adjustment. We continue the next lecture is with the adjustment. Okay, first we will look into what is capital and what is a revenue expenditure. Because we need to understand that the capital expenditure is the money that you have spent on asset. However, the things that you spend have future benefits that more than 1 year. For example, you made an additions to your buildings, so your buildings becomes more value, so it will becomes a capital expenditure. However, the revenue expenditure is something that should be treated as expenses because the benefit is only for that particular period. For example, you are just repairing the buildings. The plumbing probably damaged and you need to fix them up. Those are expenses, but not a capital expenditure. So you cannot add up the value of your non-current asset. Another thing that you need to be considered is the classifications of expenses. However, for ACC106, we do not emphasize on classify the expenses. However, later on, when you taken up other courses, for example, Introduction to Financial Management, the expenses will be classified as selling and distributions, administrations, and also financial, but not in our code. Every organizations actually they need to annual reports every year. By the end of the year, they need to prepare those annual reports, where the annual reports comprises of financial statements and also the qualitative narrations, the explaining what have been taken during the year. The financial statements that we usually prepare is statement of profit or loss, a statement of financial positions. Those normally for all the types of businesses will produce those too. However, the statement of operation profit only apply for partnerships, and the statement of comprehensive income sometimes need to be prepared for their complicated income that they receive by the company. And statement of changes in equity, that is for companies sendirian berhad and also berhad. And last is notes to the accounts, where they need some explanations on the items items in the statement of profit or loss, or also statement in financial positions. So however, for ACC106, we only need to prepare these two: statement of profit or loss and also statement of financial positions. Okay, I will show you what are the items that need to be included in your statement of profit or loss and statement of financial positions. Always remember to put the title of the statement. For example, I give you as an example of ABV Trading. That is the name of the company that we want to prepare this statement, and then the title of the statement is statement of profit or loss for the year ended and 31st December 2019 is the date for that particular year. Okay, for 2020, of course, you need to put 31st December 2020. And this is depends on what year or what date of your financial year end. Some company may end at 30th June. So you need to put 30th June 2019, for example. Okay, that's the title. And the first formula that you need to understand on profit statement of profit or loss is net sales, total of net sales less cost of sales. You will have the gross profit. That is the first formula that you need to remember, to memorize, or to understand. In statement of profit or loss, there must be amount of net sales, whereby that net sales deduct with cost of sales, or other names of cost of sales is cost of goods sold. The same thing, yeah, cost of sales and cost of goods sold. So net sales deduct with cost of sale, you will have the amount of gross profit. That is the first formula that you need to remember. Okay, the second formula is the total of sales. Sales can be either in cash or in credit. So total them up, it becomes a total sales. Deduct with sales return, or other name known as return in words, and deduct with discount allowed. So these three, sales less sales return less discount allowed, you will have the amount of net sales. Remember just now? We have net sales deduct with cost of sale, and we will have the gross profit. So to get the net sales figure, you need to have those three: sales, sales returns, and discount allowed. Now you need to remember the formula for arriving the cost of sales. How to get the cost of sales? Okay, first you need the amount of opening inventory. Okay, normally the opening inventory will be in your trial balance. Inside the trial balance, you will have the inventory as at the 1st January. So that is the opening inventory at the beginning of the year. Opening inventory, whereby the opening inventory you add with net purchases and add with costs that related to purchases. Those costs are something that you need to pay in order to get the goods for your trading, and less closing inventory. So these four items need to be need to be calculated in terms of to get the amount of cost of sales. Opening inventory, you add with net purchases, you add with cost related on purchases, and less with the closing inventory. You will arrive at the amount of cost of sales. The closing inventory, just now we discussed on the opening inventory, whereby the opening inventory, the amount should be in the trial balance itself. However, the closing inventory is the amount or the value of inventory at the end of the year. So normally, the value of inventory we will have after we close the trial balance. After you have the trial balance, then you will have the value of the inventory. So in the questions, if you say that in any questions of to prepare the financial statement, the closing inventory is outside the trial balance. So you need to find out what are the value of inventory at the end of the year. Okay, the examples for cost related on purchases, the best examples is carriage inwards. You need to pay the transportation cost to move the goods, the trading goods, from supplier premises to your premises if you do not pay that transportation cost. So you cannot have the goods and you cannot trade the goods. So that's why the carriage inwards must be put in cost related on purchases. The same goes to duty import. If you do not pay to the custom department on your import duty, so you will not be allowed to get for your goods. Now, duty import usually are at airports, the ship ports, the warehouse on the ports. So those are duty import that you need to pay in order to get your trading goods. And usually duty import are those things that you buy from outside the country. And tax, another example is tax on purchasing goods. So any expenses that directly for purchasing goods, you need to put here the cost related on purchases, because those costs will affect your pricing price, because you need to include them in your cost of the goods so that you will have a better or accurate pricing strategy. Okay. Next is the formula how to get the net purchases. Remember the slides just now that I shared, how to get the net sales. Now is the formula to get the net purchases amount. You need to have the amount of total purchases, deduct with purchases returns, or other names is return outwards, less with discount received. So those three will arrive at the amount of net purchases. So your statement of profit or loss should be displayed like this. Sales, deduct with sales return, deduct with discount allowed, you will have the net sales figure, and the net sales figure should be deduct with cost of sales, whereby the cost of sale arrive when you add with opening inventory, net purchases, cost related on purchases, and less with the closing inventory, whereby net purchases we need to have purchases, less purchases returned, and less discount received. And loss, you will have the amount of gross profit. That is the first part of your statement of profit or loss. Then you need to continue from the gross profit for the second part of your statement of profit or loss. That is when you arrive at gross profit amount, you need to add with other revenues, deduct with other expenses to arrive the amount of net profit. So the other revenues, for example of other revenues are rent received, dividend, interest received, commission received. So those items that end with the received, so those are actually the other revenues. And less with other expenses, example is salaries, utilities, stationaries, bills. So those are the items that should be put on other expenses. But however, for expenses that for related to purchases should not be here. It should be on the first part of statement of profit or loss under the subtopic of costs related to purchases. So the other expenses those are not really related to purchases. Okay, so that's are the general format that you need to memorize or need to understand how it being prepared. At the last part of the statement of profit or loss is to get the amount of net profit. Next is to look into on the statement of financial positions. The statement of financial position is actually previously known as a balance sheets, and we prepare purposely to understand what are the financial standing of the business at the date. Okay, then the preparations of financial statement is actually will follow the accounting equations, basic accounting equation, whereby asset must be equals to liability and owner's equity. So the statement of financial position will show you the total of assets of the organizations would be equal to total equity and liabilities. So the format for statement of financial positions, again, you need to put the name of the company, the organizations, and the title should be statement of financial position as at 31st December 2019. That is the date of the financial year ended. Okay, so the first part of a statement of financial positions, you need to remember the non-current asset. We're listing out the non-current assets and we list out the current asset so that you will have the total assets. So non-current asset, we have tangible assets. Remember when we learn what are the assets, the category of assets and so on. So we have a tangible assets. So these tangible assets are subjected to accumulated depreciations because the value of tangible asset normally will be reduced over time. So you need to show what are the tangible assets, the value of the tangible asset at the year end. So you need to show what are the costs, the initial costs acquiring the tangible asset, and what are the total of depreciation for the years from the first year they acquire into now for this date, and what is the carrying value. For example, the vehicles initially, or we purchased the vehicles at the 50,000. However, over the years we have accumulated of depreciation 15,000, so your carrying value is actually 35,000. So 35,000 will be the value that you will carry or the value that you will calculate for the total assets. So you should not total the asset at the cost but at the carrying value, because the vehicles is no longer valued at 50,000 at the end of the year, the 31st December 2019. The value is the vehicle is actually at 31st December 2019. The value is already depreciated, reduced to 35,000. So other non-current assets are intangible assets. Examples is brand, logos, copyrights, investment, for example, fixed deposit or a long-term investment, and also the biological assets. Normally we do not emphasize on biological asset for ACC 106, whereby the current asset, this is This usually students forgot to write under the current asset, that is closing inventory, the inventory amount at the end of the year. Okay, the next example for current asset is cash at bank, and also account receivables. So you will total up the carrying value of tangible asset, all the total of intangible assets, all the total of investment, all the total of biological asset, and total of your current assets to get the total assets. So the second part of your statement of financial position is to show what are the sources that financing the organization. So you will put the title financed by owner's equity, what you owe to the owners, non-current liability, the debt you owe to others, and current liabilities. So you will have the total equities and liabilities. So under the owner's equity subtopic are capital add with net profit, whereby the net profit you will get from the statement of profit or loss. So those amount net profit from statement of profit or loss will be transferred here, the net profit, and deduct with drawing. So capital add net profit, deduct drawings are the items to get the net owner's equity amount, whereby the owner's equity amount will be add with non-current liability, add with current liability, you will arrive the total equities and liabilities. Okay, the example of non-current liability is loan. Example for current liability is account payable. Okay, these are the format. You can download the format from UFuture, and also this note will be available in your UFuture. Okay, so these are the format shared with you in the UFuture. Okay, that is for now for preparing the financial statements.